Cheers to the red, white, and blue on this glorious day of World Cup football. Zero DT team, this is your routine briefing. We're going to start the day by looking at this document. After some feedback, I think I'm going to start just reviewing the document itself as we begin these videos. Um, and yeah, so let's get started. I hope everyone is excited for the USA versus Iran today at 2 p.m. And even if you're not, get excited. I know Mr. Market is a USA fan, so yeah, we're all getting ready and we're excited to see that game and maybe we can make some money before then. So let's look at what opportunities we have on the table for today. So um, I'm just going to kind of go line by line and just point out anything that's super important, which is going to be summarized in this little comment here. So if you want to access this document, the link is in the description of this video. I do update this pretty much every day. I don't want to say every single day because I do take a vacation once in a while, but you can look in the top left-hand corner and see if I've updated it on that day. And I'll post the briefings in here as well. And of course, it's all packaged in the lovely newsletter. So without further ado, let's just kind of check what's going on here. So starting with those candles, these are always on the daily chart, and it's obviously dynamic. So as of right now, and this will change by the way if we do pierce that prior day low, we make a lower low. It's looking like we kind of have a bullish consolidation near the bottom of the range, which may lead to a move a little bit higher. I like I said, if we don't break that lower low, or if we don't make that lower low, it's going to kind of set up for one of these Harami cross days they're called. You can look that up. These candlestick patterns I don't pay too much attention to necessarily. It's just kind of it's just another sentiment gauge. So yeah, so I'm not really going to dwell on that too much. This is all summarized in this little comment here. If you look at the comment, when we explore the chessboard chart in a couple of minutes here, you'll see that the TPOs do continue to one time frame lower. And what that's telling us is that there is some supply that's building above. The bulls had this really large demand zone that the bears are kind of cutting into a little bit, and like I said, we'll look at that in a minute here. So, like I said, that poor prior day low is my primary engagement level today. Specifically, I'm looking at that 39.60 on ES and 39.90 if we do go higher first. We do have a from yesterday. It's called a open. What's it called? I don't know the specific name for it, but the first 15-minute candle of any given day, if we don't pierce it one way or another, it becomes just a supply zone. It's just kind of a technical analysis thing. And we did put in one of those yesterday. So from about 4,000 to 4020 now, we do have what I consider to be probably the most significant supply on the chart until we at least go address that SMA above us. And then finally in here, it's looking like it's going to be a choppy day. So like I said, Mr. Market's getting ready for the World Cup game. I don't think he's too interested in trending one way or another. At least that's what he's telling us so far. I can't speak for Mr. Market. He is, you know, he's subject to changing his opinion very quickly here. But so far we're looking at an open auction, a true open auction really today. I don't really think it's bullish or bearish. There's really no sentiment around that. We have expanding pivots on the ES, which implies reversion to kind of that pivot area. I believe that pivot today is about 39.80 for those pivots. So that just really is telling us chop, and especially if VIX doesn't make a higher high. So VIX has a very significant pivot contraction. I haven't seen many days where we have that 5 cent pivot range on the VIX. So as you'll see when we look at the charts in a minute here, very tight pivots there. So what that contraction usually implies is some type of trend. So for me, based on the ES pivots, I'm not necessarily expecting too much of a trend unless VIX makes a higher high. So even if VIX starts to make lower lows, I do feel as though that 4,000 to 4020 area will hold. And perhaps, like I said, you can see my first engagement level is 39.90. So perhaps even that overnight high level may hold as well. So if VIX does make a higher high, given those contracting pivots, given the fact that we're kind of unraveling that Harami cross that we're seeing, which is that potential bullish consolidation, then perhaps we may trend a little lower. I'm still not looking for shorts in this 39.40 to 39.70 zone. I will be looking for longs, specifically a false break at that prior day low. All a false break is we make a lower low and then we quickly reverse. If you want to use, actually, no, I'll look at the false break as we get to the charts here too. I'll make a little note here to make sure I don't forget. Um, and we'll just look at that real quick too. Why not? So that's what we have here. You can look at this document. I'll package it all in the newsletter. Yeah, and that's that so far. So if we look at our chessboard, you can see what I mean about the uh, this zone here. So yesterday, this was kind of our demand zone like this, and so if I put it like that, and you can see that the bears have been cutting in to that zone. Oops, I gotta fix that. And you can see what I mean by the TPOs one time framing lower. Each one, at least the value of the TPOs we'll say, is one time framing lower, and we kind of have this nice supply area here. So the bulls are currently trying to unravel it. No surprise. I think that's good. I would prefer, frankly, to engage at the highs today. So yeah, well, I'll engage anywhere, but I'm happy to lay into or I'm happy to play that supply move first, and that's kind of what we're looking at. So the first stop, like I said, is at 39.90, I think. Perhaps we are held up a little bit at this naked POC. However, this distribution is just from the overnight session, so it's not usually too strong. It's kind of where the weak hands hang out, and so I'm looking more toward this one up here, which is from yesterday's regular trading hours. So that's the chessboard, and you can see that poor low. That's weak hands at the bottom there. So for now, it's being defended, but I think likely we will revisit that price point sometime this week, perhaps even today. So just be watching this. And again, I'm looking for longs, I think very high quality longs if we get it within this demand zone here, and even down to 40. I'm still going to be looking for that long side and not too interested in shorts quite yet. So that's our chessboard. I'm going to go ahead and hide that. If you look at the volatility chart, you can see what I mean by those contracting pivots. Super tight here. 5 cent. The pivot and pivot high itself are at the same level. In fact, VIX is already nearing that outer edge of the pivots, which usually produces a decent scalp. So I'm kind of looking on my chart here to the right. Perhaps a nice scalp is developing as we speak. However, I'm pretty strict about those engagement levels. So I'm still looking for 10 points higher. But if you're a scalper, hey, it's looking like it might be a decent spot. So maybe check your signals and see what's going on there. But yeah, so until VIX is above 2360, I do still expect this chop action. In fact, like I said, I want to see that higher high. I don't really expect to see anything too crazy on the downside. And yeah, so that's volatility. Not really too much to look at there today. Going to go ahead and hide that. And I'm going to go ahead and bring up this chart here. So first, let's talk about that false break. What do I mean by false break? Just real quick here. So again, nothing fancy. All a false break is, I like to look at it personally on a 15-minute chart, is we lose. So let's pretend we sell off right now. I'm going to zoom in if it'll let me here. Prettier. Okay. So let's pretend that we sell off right now and we do make a lower low here. So we make that lower low, but then price quickly reverses and gets back above. I like to use just the former resistance of that 15-minute bar that encompasses that higher low. So in this case, it would be this bar right here. So we make the low and then we reverse and we get back above it. So in this case, it's like 67. That's a false break. That's a long for me. Just simple, out of the money. Probably about 30 delta I like to sell, anywhere from 10 to 30 delta depending on aggression. I'm trying to really move those deltas up as time goes on here, just to, again, this beta test that I've been talking about, the Zebra beta test, is all about that buying power optimization, and as I've been looking at 30 delta versus say 10 delta, I do prefer that. So obviously less contracts, but I still do like to use the same stop, about 3x. So anyways, that is the false break. So that's a small digression, but I think that's a fun trade, and I will cover it in the future if anybody's interested in it. If you have any questions about that specifically, please feel free to drop that in the comment section, and just kind of let me know what specifically you'd like explained. So I use a device signal. If you just go to the retailtrading.com and search um, SPX volatility pivot, so it's the weekender, you can read about the device signal in there. For this beta test, I'm not using the pivot approach that I describe in that document. I think it's still a good approach. Definitely nothing wrong with it. But anyways, the device signal thing, that's my major trade entry criteria for any type of out of the money options. So you can learn about that there. So just real quick, one last thing today, I want to discuss uh, some corrections I made to the Zebra strategy. So I'm going to use the 1 day because I do have I bought a 4,000 yesterday just kind of as a nice cheap spec play. I do think that we may go ahead and touch that. So yeah, I'm going to just use the 1 day cycle so as not to confuse there. So the two changes that I'm making to the strategy, uh, one's not so much as a change, but as a clarification. So if you look at, I use Tastyworks, but whatever platform you're using, IV rank. When that IV rank goes above 30, I am going to use in the money spreads opposed to the Zebra. The Zebra is a low volatility play. And so where am I going to sell those spreads? I'm going to probably look. I used to do, let me just check this. I used to do about $17 in credit. However, I want to keep it consistent with that 70 delta. So it's when you're selling it, it's obviously going to be um, correlate to the 30 delta on this side. But I do want to keep that 70 delta pretty consistent. So I will be selling that in the money spread there once Ivy rank does pop higher. It's not relevant yet, so I'll go into it more around that time. So that is for those of you who were wondering how I'm going to play those higher volatility environments. That's really all. That's the only difference I'm going to make. We'll go into management, like I said, once the IVR pops back above there. And besides that, so yesterday when we were examining the Zebra, I said I didn't like the extra risk added onto the so let's just set it up. So pretend we're in that full. I'm going to go back to the other cycle I was talking about there. Pretend we're in that full Zebra. So I'm just going to use for the purpose of this short side here. So let's say we got 6 there. Create the long stock synthetic and everything here. Oops. Stand by. Okay. All right. 2, 3. Something like that. Yep. Let me just check the risk graph here. Make sure. Okay. So that is kind of the full hedged out Zebra. Um, and what I'm going to do instead of just adding the, wait, so what do I do wrong here? Okay. Anyways, instead of just adding the other side as well, I'm going to use that. So like, let's say we're at an extreme and let's use the overnight high here. So at the overnight high, my first look is going to be short. So let's say that I'm shorting at that overnight high. I put on the full trade. It starts to move against me. I get everything hedged out. And second. Yeah, I get everything hedged out and it's not working out. Instead of adding that, in this case would be the call side, I'm going to first set this up again. Buy. Okay. Instead of adding that call side, I'm just going to sell that out of the money spread that we talked about with a divide signal. So it's not going to, assuming that I'm completely wrong on the day, it's likely still going to be a red day. But I think I like that adjustment a little better. It's less trades. It's easier. It's the win rate's going to be slightly lower. However, I think it's a little cleaner. And if I have a specific directional assumption, I can always use either futures or, 45-day or different cycle in SPY, let's say, if I really want to try to squeeze the juice out of that lemon. But I think for the purpose of this beta test, we want consistency, and that's the best way to do it. So again, I'm sure that the whole zebra thing is going to be confusing for a lot of you. I'm gonna keep bringing it up so it'll become more familiar. And like I said, I'll show you real time examples as they come. Yesterday's obviously worked out. I never even had to add that short stock or long stock synthetic. I just had and I didn't really have to. What did I end up today with? I think yeah, it was just a standard zebra. So a standard zebra I wrote all the way down because I did make that. So yesterday's a perfect example. I did initially make that call adjustment. That actually cost me about $700 of profit, which not bad. Still a good day, but it was just super confusing. And I think I got a little bit lucky, to be honest. If it had gone completely against me, I think the loss would have been pretty large. And so that's why I'm just kind of gonna stick with this. Obviously, we can make tweaks as time goes on. We'll be watching the data. As of today, though, that's what I'm gonna be looking at. So yeah, this was a longer video today, so I thank you for sticking with me if you're still here. And one more plug for the U.S. soccer team at 2 p.m. We are playing Iran. We have to win to advance. And as they say in U.S. soccer, I believe that we will win. So please feel free to engage with me in any of the links in the description. Like I said, happy to answer any questions in the video as well. And that's all I have for today. So until tomorrow, stay patriotic and stay classy.